ServiceNow shares down about 1% in overtime after an initial pop. Q4 numbers out earlier this hour, short of beat on the top and bottom lines on strong subscription revenue growth. Earnings call kicks off in about 15 minutes. The guide was a beat as well. Joining us now, Scott Kessler, Global Sector Lead for Tech, Media, and Telecommunications at Third Bridge. Scott, the stock is down fractionally, but it's up more than 35% since last quarter. 8% just in January. So is it fairly valued, even considering all this growth?
I mean, John, this could be a situation where either folks are selling on the news or they don't want to necessarily position themselves before Bill McDermott and team talk about the quarter and the guidance in more detail.
And so what are the most important metrics that you need to hear? I talked to him a bit ago about the AI momentum, the speed to innovation that he says customers are seeing, the custom LLMs that they're rolling out across different customer groups, and the fact that he's not taking his foot off the gas because he believes in their growth. What more do we need to hear?
Look, I think those are all very important points, but I think at the end of the day, people want to understand what the roadmap looks like, what kind of the adoption looks like, and kind of how much continuing momentum there is there. There's no question that they offered some encouraging data points as well as commentary around the adoption of their new AI products, but it's amazing to think that they were just released at the end of September. So this is the first full quarter where we've seen those have an impact, and they've introduced more and are expected to introduce more at a pretty strong clip. One expert we spoke to said that ServiceNow could introduce innovations at a much faster rate than companies could understand and adopt them. And so I think kind of balancing that out is a big challenge for the company.
You sound like somebody who's not necessarily surprised to see the stock under pressure right now in after-hours trading, despite the strong earnings results we just reported on.
Well, so Morgan, I mean, John spoke to some of the recent performance metrics from a stock perspective. The stock is up over 70% over the last year. And the reality is that while this company has performed very well, I think ServiceNow is understood as a pretty conservative operator. I think a lot of people want to understand if this is going to be a company that's going to generate organic revenue growth closer to 20%, or closer to 30%. We spoke to someone recently who told us that he wouldn't be surprised if the growth were closer to 30%. And that's kind of the discussion, the debate that's going on right now regarding this company and this stock, we think.
So what do you want to hear on the conference call? What do you plan to ask?
I think what people really want to understand is how much momentum is there associated with the product pipeline as it pertains to AI. And then the flip side of that is how much demand is there. I think we all understand that ServiceNow and many other software companies are charging significant premiums for AI-enabled products, somewhere between 50 and 100%. The question that I think a lot of people are asking is whether or not there's enough bang for the buck in that context. Bill McDermott has talked about this notion of fast ROI. And frankly, folks that we've spoken to have said, hey, you can get 30, 35, 40% productivity and efficiency improvements. And we've talked to people who say those could be conservative. So trying to figure out those constructs and how much demand there will be as a result really is what investors are trying to figure out at this point.